What's up, guys? Welcome back to our channel. I am Kenya with VK Forex Academy, and in today's training, we're talking about how to trade the NFP. I'm going to show you some brilliant ways on how to trade this news release. And maybe you've been uncomfortable like I was in the beginning when I was a new trader, and I would see the volatility around NFP and I wanted to be in on it and I just didn't understand. I'm going to show you exactly how to approach this. You don't want to just watch a YouTube video and then go do exactly what that person says. You want to prepare yourself to always go into the market and test it for yourself. So let me prepare you on what to do, and we're gonna hop right in. Before we do, give me a favor and smash the like button on this video. Make sure you subscribe and turn on that notification bell, and let's hop right in. The NFP report measures the number of U.S. workers, excluding farm workers. So it's very important you understand what this report is about and how it drives the market. So let's go ahead and take a look at Forex Factory. They give great information and you can go and read it for yourself. So all you have to do is go and find this report. Comes out the first Friday of every single month. So when you have positions open that have the U.S. currency in it, you want to be very careful. It can also impact other pairs as well because we are the leading world currency, but you want to be sure that you're always trading with a stop loss, that you have a plan. And most importantly, if you don't know what you're doing, guys, stay out of the market. Just study from the sidelines. That's what I would do. I would sit on the sidelines. I would take notes. And I learned over the years just by observing, and you can do that as well too. So if you go here, you'll see that last Friday on August the 5th, if we simply just go to USD, so if you click on any of these envelopes here, it will give you a description of what that news release is about. So if we find non-farm employment change, all you have to do is click on this folder and it will tell you all about it. Now you're going to notice that there's three numbers here. So look here, when we scroll over to the right, there is a number that says 528. So that's the actual number that was reported. 250K was the number that was the forecast. So that's what people thought the number of jobs would be for that report. And then previous is the previous number, so the previous month and what that report released. So last month, we had a total of 398,000 jobs that were added to the U.S. economy. Now, the forecast for this month, or last month actually, for August, was that, or I'm sorry, for July, so it came out August, the first Friday in August, was the forecast was 250. However, it came out to 528. So when you open up this report, you're going to read the details of it, and you simply are going to click here, and if we scroll here, you'll see exactly what it says. So you see where it says actual, forecast, and previous. You can see all the previous projections or the numbers that actually came out for those previous months and how the U.S. economy has been performing overall in terms of jobs. Now, why is this important? Because as I said before, when jobs are going up, that's great for the economy because people are likely going to spend more money, and that's good for our currency. But if jobs are declining, and of course we've been hearing all about inflation, right? Then people are going to be spending less money, which that wouldn't be the best for our currency. So we want to be on the rise of things. So we'd like to see jobs increasing and not decreasing. So when you see that this number, for example, if you see that the number is better than the actual forecast, then most likely the market will be bullish. Now, what you need to understand is that some people think they can just look at this number and think that the market is going to move automatically to the way it should go. So for example, if we think that the actual forecast is better than what the predicted forecast was, and we say that the market is going to be bullish, you might see that the market performs opposite of that. And the reason being is because there's so many positions that are open. There are traders and also hedge funds and retail traders who may be trying to hedge their positions. So the market does a little whipsaw. It moves, it jerks up and down sometimes, and sometimes it'll just go the direction that it should go in. You need to be prepared for all of that. So what I recommend is that if you're not comfortable with trading this news release, sit on the sidelines, take notes, open up your trading plan every first Friday of the month and observe what you see and take notes. Note what initially happened Did you see, for example, on the lower time frame that it broke out in the direction that actually coincided with the actual prediction or forecast of the news and the actual report that came out? Or did it do the opposite? And if so, for how long? Did it do that for the first 15 minutes, for the first 30 minutes? What did you see? So that's how I learned, was by observing and then also understanding the news report. So what I used to do, you can do two things. You can either trade the breakout of NFP, or you can just let them jack up the market however they want it, whatever they want to do, which is what I used to do. And I used to trade the reversal. So I'm comfortable doing both. I'm going to show you an example of Euro USD and what happened and how you could have approached it. And then you're going to have to determine what works best for you. But this is how you can understand these news reports, is simply by going and reading it for yourself. And what I recommend is that you recap in your trading plan what happened on a particular month. For example, in July or August or July of 2022, and what was the actual forecast and previous number, and then take an image or an illustration of your chart. For example, let's go to Euro USD, and we're going to look at what happened on Euro USD, okay? And then you're going to take an illustration of that, put it into your trading plan, and compare it with the data report and see exactly how the market performed. Do that for the first few months and learn from what the market did. And that can help you get comfortable with trading NFP. Do you prefer to trade the breakout? And if so, you can work out your risk management around that. One of the things that I recommend you always do is, after you study the news report, you then want to go to your chart and you want to make sure that you spot the key levels. What are the key levels in the market? So right now you can see that I'm on the daily of Euro USD, and this pair has been ranging. It is overall in a downtrend. So look at this. It's overall in a downtrend. We can see that with our naked eye, but it has been ranging over the past few weeks. So if we can see this, it's holding resistance right here at 1.0273 and holding support right here at around 1.01, okay? So what we did was, we understood that because this number was greater, this July report, NFP report, was greater than the actual forecast, that was really good for the economy, the US economy. No one expected that. We expected a decline, to be honest. And so what happened is that that made the USD currency bullish. So in terms of Euro USD, and this currency pair, Euro is the base currency and USD is the quote currency. So when I say base, that means Euro is the first that shows in this pair and USD is the second currency that shows in this pair. So if USD is bullish in the case of this Euro USD pair, it's going to move downward. So now let's go down to the lower time frame. I'm going to go down to the 4 hour, and then I'm going to move on down and keep going down. I'm going to move down to the 1 hour. And what I'm going to do is I am going to find the date of that report. So the report came out on Friday. That was actually it was August the 5th. So let's go find August 5th on our chart. And this is August the 5th. So you see that here? I have my crosshair on it at the bottom. It shows August 5th. So look here on this 1 hour, what happened, right? So what you're going to do, notice on the daily how I already have my key levels. So I have this resistance, I also have this support, and I also have my eye on this historical low here on Euro USD. All right, but I'm pretty comfortable with how this pair moves and about its average daily pip movement. So I can almost project probably where, if it did break out, where it might turn around. Now, because it's been in this range, I want to keep my eyes on this support and also on this resistance. But because I understand the news report and understanding that USD is bullish, I expected for the currency pair to break out to the downside. So now let's go to that lower time frame. I'm going to go down to the 1 hour and we're going to find that date. So it was Friday, August the 5th, and you can see that the price was consolidating on that day. Let's go ahead and go down to the 30-minute. I'm going to recommend that you either have a chart on the 30-minute or the 15-minute because you will be able to see that breakout very clearly. So let me just find my date. Let me scroll back here. And here we go. So this is August 5th, okay? So notice how the price was consolidating. So look here how the price candles are very small, right? And then all of a sudden we got this huge movement to the downside. That was when we had the news release. So here's what you can do. Now, some traders have very specific ways in how they trade NFP. I honestly don't like to guess. So if I don't understand the report, or if there is some indecision, or I feel like the numbers are too close to where there's probably not going to be much increase or decrease, then I just sit out. But if I know clearly and have an understanding where price is going, I will go ahead and trade the NFP news. So in this case, we got a clear breakout to the downside. You could either trade the breakout of NFP if you understand the news. So in the case that I understand that it would be bullish, I expected for Euro USD to go down. I expected for example, USD Chef or USD CAD to go up. And I'm going to show you right now. Let's go to USD CAD, and here's USD CAD on the 15-minute. So USD CAD did the exact opposite, okay? USD is the base currency, so it was bullish and it went to the upside. Now, could it have whipsawed and went the other way? Absolutely. Sometimes that does happen, and that makes a lot of traders nervous, especially retail traders. So again, if you don't understand what you're doing, then simply just sit out. It is okay to do that, okay? So I understood what I was doing, and just the steps that I've told you to go through is exactly what I went through. I took, honestly, over a year or two to really just observe these type of news reports and trading fundamentals and understanding exactly how they impact us as traders. I did learn in an education program, but I didn't have enough guidance and mentorship to really ask the deeper questions that I needed answers to. So it just took me time to really learn and get really good at it. And I found my fit. And like I said, when I don't understand, I sit out on the sidelines. So as you can see here, you can trade the breakout, or there's another approach that you can do as well, is you can trade the reversal. So let's go back to Euro USD, and you'll see here that the price did break out on this 15-minute. Now you can also wait and do nothing for the first 15 minutes, because sometimes that market will just whipsaw back and forth, and then it'll finally go in the direction that it's intended to go in, right? So if you want to just wait the first 15 minutes, you can let this candle break out. However, look at the 15-minute when this broke out. So on this 15-minute candle, the price never did pull back at all. And look how much it dropped. Let's just get our measuring tool, and from the top to this first 15 minutes, it went down 65 pips, okay? The next 15 minutes, that candle opened up and continued lower. So it went down another 19 pips, and then I'd say another 30 pips altogether, and then that's where it started to correct. So like I said, if you have your eyes on the levels, if we go out to the 4-hour, you'll see that, let me see, was that, it's right here, okay. So this is where, for example, the market started to, did it start to correct? Hold on one second, let me make sure I'm in the right area. So July, let me go to the right area. So I'm now on, okay, here we go right here. So this is August 5th. So what I say, you can trade the correction, right? So what I would do as well is I will let them, jack up the market. So look, this is a key level here. This is actually my key level support, but on the daily, price has actually been holding support right along in this area here. And you can see that. So once you start to see that the currency is weakening at a level, or is starting to slow down and lose momentum, then you know that, the noise is settling, and now it's time to start correcting. In this case, you can take your Fibonacci retracement tool, measure from the high to the low of the rejection candle, and then you look for the retracement. So you would trade the retracement. You could have traded this back to the 50% fib. It even came to the 618 fib and rejected right off of the 78% fib, okay? So you could have traded the correction. So I used to do that all the time. Again, you can find your fit, guys, but you can either trade. The most important thing is you understanding the report and what that report means for the US economy and how it impacts the market. If you can understand that and then start to study the market direction and how it moves during the NFP report, that will help you tremendously. You don't have to just rely on a YouTube video or someone telling you to do this or trade this strategy or trade that strategy. You can develop your own strategy with confidence based on what you see and what you actually observe, and write down the data to understand it yourself. That is the best way to learn as well. You can learn from YouTube videos and other people's experiences like mine, but it's so important that you go and test it for yourself. So again, you can trade the breakout, you can trade the reversal, or there's other ways too where you can do nothing for the first 15 minutes, see what the market wants to do, and then you can trade, for example, an inside bar. You can go do more research on that, but there's different ways that you can do that. You can wait for a second candle open for the intended direction you expect it to go in. But those are just a few tips on how you can profitably trade NFP. Most importantly, you have to understand what's going on. So guys, I hope that this video helped you. Again, if you are a new or struggling trader, I recommend that you check out our academy. We provide structure and guidance to help take you to the next level. And also we have very profitable trading strategies and a structured system to get you where you need to be. I hope you guys learned something. Drop a comment below and let me know how you enjoyed this video or what type of tips can you share for trading NFP. I would love to hear it in the comments. Thank you guys for watching, and I'll see you in the next training video.